So we are going to be able today to compute state taxes on a straight percentage basis. The reason why we're saying straight percentage is because there is a graduated percentage basis that we'll be talking about tomorrow, which is actually how taxes work in general, is kind of like that graduated that we looked at yesterday. It wasn't really a graduated one yesterday, but as your income increases, the rate of taxes you pay also increases. So we are going to compute state taxes on a straight percentage basis. So getting ready here. How are the taxes you pay used? We talked yesterday about federal taxes, but state taxes, there's quite a few. Heidi Winston was surprised to see how much was taken from earnings to pay taxes. She remembers from history classes that U.S. citizens taxes support government at 3 levels: federal, state, and local. Sometimes there are local taxes as well. And the best example I can think of is places that have sales tax. So for example, if you live in Washington, there's a sales tax for the state. If you live in Seattle, there is an additional city sales tax on top of the state sales tax. So there are, depending on where you are, taxes vary in terms of sales tax. In fact, I think there's one town in Southern Oregon that has a city sales tax. And I can't remember which one it is, but there is a city that is in the south of Oregon that does use a sales tax for that city. So that would be considered a local tax. Something else that is considered like local taxes is when new schools are built, right? If you build a new school, that goes on as a bond, but a bond is essentially, taxing your property at a little bit of a higher rate. And so in certain locations. So if Portland builds a new school, their property taxes increase, but ours don't, and vice versa.
Don't have a pool of money that needs to build a school.
We
only, especially in Oregon, we are specific.
I was going to say Oregon in particular. Yeah.
Bond.
Yes. In order to build a new school. Yeah.
Get that down.
Other states do have money set aside for that kind of stuff. Oregon doesn't. So it's up to the local electorate to decide, which some people might argue is a good thing, because what the local people want, the local people get. Other people might argue differently, because just because you don't want something doesn't mean you shouldn't get that thing. So there's definitely arguments there. I know what side I fall on. I don't necessarily need to talk about where I'm at with that. I think I talked a lot about it in the fall. So if you were in one of my classes in the fall, you know where I stand on that. Anyway, let's keep going. State income tax. Most states require employers to withhold a certain amount. Most states, right? Most states require employers to withhold a certain amount to pay for income tax. In some states, the tax withheld is a percentage of the taxable wages, which we definitely do here as well. Your taxable wages depend on exemptions or withholdings. We talked about that yesterday with federal income tax. It's the same types of calculations. I'll just go ahead and say that. The calculations we're doing today, basically the same as yesterday, because federal taxes and state taxes are very similar in how they're calculated. So exemptions, withholding allowances are the same thing. So the withholdings from yesterday, exemptions today, they mean the same thing. It reduces your taxable wages, which reduces the amount of tax you have to pay. They allow for supporting yourself, your spouse, or others in your family who are your dependents. We also talked about that yesterday. The more people you claim as a dependent, the less you have taken out in taxes, because you need to hang on to more of that money up front to help support the people who depend on your income. So taxable wages are equal to annual gross pay. So this is where it's a little bit different today. Yesterday, we talked about weekly. Today, we're talking about annual. So in terms of the entire year. So the annual gross pay minus the exemptions, the annual exemptions. The state income tax is equal to the taxable wages multiplied by the tax rate. Basically what we did yesterday. We are not going to be using a table method today, so you don't get another cool packet of a bunch of numbers. We're just going to be doing some calculations today. So make sure you have yourself a calculator. We've got just a couple examples that we're going to be working through today, with hopefully plenty of time after. So Tony Raymond's gross pay as a landscape designer is $44,750 a year. The state income tax is 3% of taxable wages. By the way, it is not common for a state to just tax everybody at the same rate. That is not a common thing to do. This is just an example of kind of getting us ready for the graduated, which is what most states do for tomorrow. He takes an exemption for himself and one exemption for his child. 2 exemptions. How much does Tony's employer withhold yearly from his gross earnings for state tax? Use the exemptions table here. You will also need to use this table on your assignment today, figure 2.2, to find the annual income tax withheld. So the exemptions are a little bit different in terms of where they appear and how we deduct them today, but it's the same idea as yesterday. So first thing you need to know is that if he is, let's see. He takes an exemption for himself and one exemption for his child. It does not say anything about married, does it? In this problem? I don't see anything that says married. Correct. So we're not going to, if it doesn't say married, we're not going to use this deduction here. Now, married just means 2 people. And that's why it's double the amount of the 2,000. It's 4,000. So in terms of number of exemptions, married means 2 exemptions. Anybody that isn't yourself or your spouse who depends on you is an additional 2,000 per person. So yesterday, where it was like 63.46 per exemption per week, that was just total number of exemptions. Today, it's being broken down into different categories. Single means that's 1. So you get a $2,000 deduction for yourself, plus another $2,000 for each dependent. So there are a total of, he's claiming a total of 2 exemptions, one of them for himself for being single, one of them for his child as being a dependent. So his annual gross pay, the taxable wages are going to be the annual gross pay, $44,750, minus the total exemptions. What's the total exemptions? 4,000. Himself is 2,000 plus his child, another 2,000. Which makes his taxable wages, TW, equal to what? $40,750. Those are his taxable wages. Same idea as yesterday. We're calculating, the reason why the numbers are so much bigger though is because today we're talking about annual as opposed to weekly. If you break it down by week, it'll end up being pretty similar to what we saw yesterday, I would imagine. All right. Now the taxable wages times the tax rate is equal to the annual tax withheld. So let's just say, instead of fit, let's write SIT. Yesterday was FIT, federal income tax. Today is SIT, state income. All right, equals the wages, $40,750 times, what's the tax rate in his state? 3%. What do we write as a decimal? 0.03. Good. So 40,750 multiplied by 0.03. What is the annual? $1,222.50. All right. I'm kind of curious how that stacks up against yesterday's table method in terms of weekly. So I'm just going to do a little number crunching here. 52. Yeah, if we divide 40,750, that's the taxable wage, divided by 52, that's going to be 783.65. So that would be between 780 and 790. Now, I wouldn't necessarily expect these to be as close as the table versus the percent method from yesterday, because state and federal income taxes are often calculated quite differently, but I'm just curious how this stacks up. So between 780 and 790 is going to be right here. He's claiming one allowance. No, 2 allowances rather. That would be $84 a month. If we're going, no, $84 a week. His state income tax is about $23.51 a week. So the state income tax level is definitely lower than the federal income tax level, which is not uncommon. All right. So these numbers won't necessarily match up. I was just kind of curious as to how they compare. So there's our answer for problem number one. So I want you to try these two on your own. Use that table from the previous page. Yeah. Calculate the taxable wage, calculate the state income tax. Hopefully doing this is a little bit easier than doing the percentage method from yesterday's. It's more challenging than the table method because you actually have to do math, but it shouldn't be as, not as many steps, I guess I should say. Not as many steps as yesterday's percentage method. All right, what are the total exemptions for number one? $10,000, yeah. So married is worth how much? What's the value of exemptions being married? 4,000. What's the value of the three dependents combined? 6,000, because each dependent is worth 2,000. So total exemptions, put those together, 10 grand. So that's a lot that is able to be deducted. So exemptions, $10,000 in exemption. So we get to deduct $10,000 from the gross pay to get the taxable wages. So the taxable wages are going to be 23,760 minus 10,000. So that brings it all the way down to $13,760 for the taxable wages. So then the state income tax is going to equal that 13,760 times what? 0.04, which gives us state income tax for the year totaling what? Yeah, $550.40. Nice. If I wasn't teaching, I'd probably be working at a business that has to do with finance. Like as an accountant, I think being an accountant would be kind of fun. I like calculating stuff. Accountant work would be kind of fun. Financial analyst is also something I'd be interested in, but I enjoy teaching, so I'm going to stick with that instead. Number two, what are the total exemptions? 4,000. Yep. Single is worth 2,000. The other one dependent is worth another 2,000. So exemptions, $4,000. Taxable wages, 43,300 minus the 4,000. So $39,300 in taxable wages. What's the state income tax? Who's got it? $19.65. Good. So if we take 39,300 multiplied by the 5%, 0.05, $1,965 in state income tax. Cool. Similar to what we did yesterday. Not exactly the same, but pretty darn similar. All right. Last couple of problems are going to deal with some algebra. So we're definitely going to have to set up some equations on here. So if this was pretty easy, I don't think this is going to be too much more challenging, but it will be more challenging just based on how it needs to be set up. So any questions on 1 or 2? Does anybody need more time to write down 1 and 2? All right, let's keep going then. So Andrea McReady is a dispatcher for a local trucking company. She earns $52,600 per year. She's married and pays $2,430 in state income tax per year. So it tells us how much she's paying per year in state income tax. So that's this amount here. So we're given the total amount of state income tax. We have to figure out the income tax rate. So she's married and she claims no other dependents. All right. So we're just going to say R is equal to the state tax rate for Andrea's state. Use the formula for state income tax, substituting the taxable wages and solve for R. So in order to do that, though, we need the exemptions first. And let's actually just go ahead and write out some information off to the side here. So we know that her gross pay is $52,600. Let's just get some info. Gross pay, $52,600. What are her exemptions, total exemptions? She's married. She claims no other dependents. 4,000. Okay. So then her taxable wages would be what? What are her taxable wages? Gross pay, exemptions. Hmm? 4,000 is what we're taking away. Instead, not 400. Yeah. Yeah. Taxable wages, 48,600. So the formula that we're using, right back over here, state income tax is equal to taxable wages times the state income tax rate. So that's the formula we're using. We know, we also know her state income tax. How much did she pay in taxes total? 2,430. Okay, so here we go. We need to substitute in for the state income tax. We know that number, it's 2,430. So 2,430 is equal to the taxable wages, which we also know, 48,600, multiplied by the state income tax rate, which is R, which is what we're deciding on this one. So solve for R. What do we do? Those in the back, go and put the phones down. Eyes up here. Divide by what? Yeah. Divide both sides by the number next to R, 48,600. And if we're talking about an income tax rate, what kind of a number should we get? A decimal, right? And a pretty small one at that. Because if you think about income tax rates here, 4%, the decimal was 0.04, 5%, 0.05. First problem, 3%, 0.03. So we should be looking at a decimal value in the hundreds. Or at least less than 10% probably. Maybe it's more, but we don't really know yet. But it shouldn't be a large number is what I'm saying. So what is 2,430 divided by 48,600? 0.05. Exactly, 0.05. Equals R, which would be good. Let's just say tax rate equals 5%, because 0.05 equals a 5% tax rate. Had we divided things the other way around, 48,600 divided by 2,430, we would have gotten an answer of 20. Now, first of all, even if the whole number related to the percentage, 20% is still really high for a state income tax. Also, 20 is the same as 2,000%. So if you were to convert that to a percentage. So make sure that if you're figuring out a tax rate, the decimal should be a pretty small number. Question? Cool. Yeah, in terms of what I would teach, there was one option. Yeah, for sure. I have taught other subjects other than math, but not by choice. Because my first job, I got hired like right at the beginning of the recession in 2008. And so through that time, a lot of teaching jobs went away and things like that. So I went and got certified in language arts and social studies. So I actually taught social studies for a couple of years in a middle school. That was not my jam. I did it because it was the only job I could get, but high school math is like, yeah, that's where I'm at. All right. Questions on this one before you try the last two on your own? All right, give them a go. 5 minutes on those last two. Check back in at 11:21, and then you'll have the last 28 minutes of class for work. These two are very similar to what we just did. However, you're not calculating the tax rate on number 3, you're calculating the annual salary because you already have the tax rate. Two good questions. I like these. All right. So it's been 5 minutes. If you're not done with both of them, that's all right. I went ahead and wrote out the information for each on the side here in hopes that if you don't have an equation yet, hopefully this will help you figure out an equation. So the state income tax for number 3 is $3,040. Tells us that right here. The total exemptions are 10,000. And the reason we know that is because she's married. That's worth $4,000. 3 dependents is another 2,000 each. So 6,000 for 3 dependents plus the 4,000 for being married, 10,000 total. State income tax rate is 4%, 0.04. We need to find the annual salary, which we don't know. So that'll be our variable X. But the formula uses taxable wages, and taxable wages are annual salary minus the exemptions. So the salary minus the exemptions, taxable wages would be X minus 10,000. So here we go. State income tax is equal to taxable wages times the tax rate. We know the state income tax was $3,040. We don't know the exact value for taxable wages, but we know that it's the annual salary, whatever that is, X minus the exemptions, which is 10 grand. I'm going to put that in parentheses, X minus 10,000, because we have to multiply that by the tax rate of 4%. That's our equation. Now, there's a couple ways we could go about solving this. The first thing would be to distribute the 0.04 to the X in the negative 10,000. However, we need to get rid of this multiplication anyway. And we have another number over here. What might be a good idea instead of distributing this to undo the multiplication? Divide, yeah. So if we divide by 0.04 on both sides, that'll cancel out the 0.04s here. And if we divide by 0.04 over here, we're going to get a much larger number, which makes sense because we're calculating the annual salary. So 3,040 divided by 0.04. If you did it the other way using the distributive property, you'll get the same answer. I just find this to be, in my mind, a little bit simpler, but if you want the other way, that's fine too. So that is 76,000. And that's equal to X minus 10,000. So now what we have to do to get X by itself is what? Add 10,000. Yeah, what's 76,000 plus 10,000? 86,000. So annual salary $86,000. There's our answer. If you didn't get that initially, hopefully that makes a little bit more sense. We're using the same formula each time. We just are being given different information for each problem. But we're still using state income tax equals taxable wages times the state income tax rate for every single one of these. Even for number 4, which again gives us different information, but we can still write that equation with the information that we have. Questions on number 3? Okay, look at number 4. Again, I went ahead and wrote out the info. I'll leave 3 up there in case you need to write that down as well. So the salary, $63,400. The tax rate, 4.5%, 0.045. State income taxes, $2,493. We need to figure out, first of all, total exemptions. So that's X. Once we figure out the total exemptions, we'll figure out how many there are. But we need the total to know how many there were in the first place. The fact that he's single is also important, which means he's going to have at least $2,000 of exemptions. If he's just single with no dependents, that's $2,000. Anything on top of that means there will be dependents. So what's our equation? Right, equals, because we need state income tax. Let's write the whole equation first. Equals taxable wages times the state income tax rate. What are the taxable wages here? We didn't write that on the off to the side. What is taxable wages? How do you calculate taxable wages? 63,400. I like that. But taxable wages are the annual salary. What? Minus what? Minus the exemptions. Taxable wages, annual salary minus exemptions. So this time it's 63,400 minus X for taxable wages. So 63,400 minus X times 0.045. Now you were going to say divide 2493 by 0.045, right? That is correct. We should start by doing that. Or if you want to, you can distribute the 0.045. I prefer just getting rid of the multiplication as opposed to distributing it. So divide both sides by 0.045. Cancels out there. Divide by 0.045. Okay, so there's that. 2493 divided by 0.045 is what? It is a number, yeah. Yeah, 55,400. All right. Equals 63,400 minus X. What's next? Yeah. I'm going to go with that. I like to keep my X over here. Because if we bring this over, we'll have 0 there, which you could do and then add the X to the other side. That's fine. That actually is perfectly fine, actually. There's nothing wrong with that. I'm going to write this, though, because things get a little funky when we do that subtraction. What is 55,400 minus 63,400? It's negative 8,000. Now, obviously, you can't have negative 8,000 in exemptions. But what does that equal? It equals negative X. The positive X would be 8,000. Yeah, if we divide or multiply both sides by -1 or just drop the negatives, that means that 8,000 is equal to X, which means that the total exemptions are $8,000. So exemptions are $8,000. That's not the answer to the question, though, because the question is, how many exemptions does he claim? Divide by $2,000, right? Because himself and each dependent are worth $2,000. So, number, exactly, yep. Number of exemptions would be 8,000 divided by 4, which equals, not divided by 4, divided by 2,000, which equals 4. So 8,000 divided by 2,000 equals 4. So there are 4 total exemptions. So 1 for himself and 3 for dependents. That's what we're looking at. Cool. Any questions? Yep. Yep, that also works. That would be the same thing here as subtracting 55,400 from this side and then adding X to the other side. Yeah. Yep. The reason why I like writing an equation, especially with these ones, is because we write the exact same equation every single time. We just plug in different parts of it depending on what we need. Yeah. Huh? Huh? That's fine. Yeah. For sure. If you can pick it out and understand and how to interact with those numbers just based on the paragraph, that's cool. Yeah. Yeah. And some people's brains can do that, but a lot of times if you're reading it, a lot of times it just ends up being a jumble of numbers. And so putting some order to it, especially for my brain as well, where it's like, I need to create order out of, this isn't chaos, but like, it's not as structured as I would like it. So I want to create order out of less structure than what it is. So anyway, yeah. But like, I mean, do what works for your brain for sure. And as long as the work that you show makes sense mathematically, I'm good with that. You don't have to do it exactly the way that I do it all the time. All right.